For those of you who don't know, this is Priya Parrish. She is a partner and she's the CIO at Impact Engine, which just about everybody I know in the field of impact would consider to be a thought leader, an early mover, and a position taker. So Priya, welcome.
Thank you. Thank you for having me.
You bet. You and I have talked about this, Priya, but I want to revisit it. You know, that theory that you guys put into practice is one that I think a lot of firms would try and emulate. No doubt the bigger you get, the harder it is. But it's probably fair to say, with no disrespect to anyone, most fail at it.
Yeah.
Right? How do you guys knit that together culturally to make sure that what you're trying to achieve, that differentiated set of opinions, without, call it, overweighting one person's opinion? How do you do that?
Yeah. I think that there are a few key ingredients, but also you have to continually be committed to that and work for it. One is that we do very intentionally, whenever we're hiring, we're looking for an alternative experience and perspective, which allows us to have mutual respect. So, for example, when I'm speaking to my impact lead focused on economic opportunity, I know that's his expertise. So when I ask a question, I really want to know his answer because I don't have it. And when someone has a question about, fund investing, which is my area of expertise, they really want to hear my answer because they're learning something. And I think we get really excited when all of a sudden these different perspectives align. And when they don't, we naturally don't want to invest because why would I want to invest in something that this expert here doesn't really believe in? Right. And so that's what we do. But I think a lot of it also does come down to like personality and values of the firm. And humility is one of our core kind of stated values of our firm, a growth mindset. And we really don't keep track and do often forget whose idea it was, but we are continually, I think when you operate that way, it becomes embedded in the culture, but you have to continuously foster that.
I want to get to a question that I know is important to a lot of people. What about the trade-off between the two?
So there are a few important aspects that allow the integration of the financial and the impact. And that's ultimately what we're looking for. We're looking for business models, teams, and markets where what it means to be successful impact-wise lends itself or can drive what it means to be successful competitively from a margins perspective and financially. And for us, one of the first kind of key principles is that we're typically looking for product or service-based impact, meaning the product or service has been intentionally designed by an entrepreneur who really, really understood why that market failure exists, why people or businesses are not getting what they need at the right price point in the right place, whatever, and have designed it to solve for that. They bring some insight, and the more of those things they sell, the more impact they create. But obviously, thinking through cost structures, thinking through scale, and everything in between in the team, the devil is really in the details in that diligence. But it's not a separate track. Right? We're really diligencing. So when we're thinking about the team, we're thinking about impact as well as do they have the skills, the go-to-market experience, the financial experience, et cetera. When we're, diligencing the market, we're diligent in the competitive environment. We're diligencing impact within that. Like who else is doing this? Where could impact actually be a disadvantage, et cetera? So it's embedded. And, so let me pause there and let me go to the fun side. So on the fun side, in many ways, I'm going to say two contradictory statements. On one hand, we're looking for funds who do what I just said, who are like us, right? And because we have, over a decade of experience doing this, whereas a lot of impact fund managers are much newer to this than us. So we have that pattern that like, hey, if you're not embedding it, if you're not thinking about those trade-offs from the first deck you see or the first call and you're doing it at the end, you're going to miss it. And you're going to get emotionally biased in one way or another or anchored. And so we're looking for that trait. And on the other hand, we're also, I guess going back to our firm value, try to be as open-minded as possible that there are multiple ways to do this. That is the beauty of this industry. And not just the impact industry, the investment industry. There are a million ways to skin a cat, right? And two very smart people can come to very different opinions about what's a good investment and a bad investment. And so we try to be really open-minded and really listen. But the thing that that connects those two disparate arguments is the thing we don't let go of, which is that you have to have a team, you have to have the fund manager really, really understand their market.
I mean, you guys subjectively, observationally have a process that works, right? On the other hand, a lot of fund managers would say, yeah, we do that, and can't really prove it.
Mm-hmm.
So there is this discussion about measurement and metrics and how you manage, your performance and how you display it. How do you guys think about that?
Yeah. So starting with, I would say, the impact reports and financial reports are after the fact. But when you're doing diligence, you really want to look at way before then, because especially
Yeah,
in private markets, it's a long time before you really see the result.
that's right.
So if you actually look at our diligence and our memos, which we share with all of our investors, you see both the business and impact diligence, as well as the impact side culminates in a theory of change and a thesis and proposed metrics. So you see that from the beginning. You see a side letter or impact commitment agreement that commits the company or fund to managing their business to strive for these outcomes and measure it. Um, and then you see us collecting metrics and commenting on the impact on well, we collect it roughly twice a year, but we do quarterly reports. So an investor gets a letter from us, financials, investment schedule, as well as impact at the company level, every single company, every quarter. So it's embedded. It's one package, and you get it. Um, and after there is an exit, whether it's a positive or negative exit, whatever it is, we also try to go back and analyze and be like, did what happened? What impact was created? Um, and so we think about both measuring as well as managing impact throughout the life cycle, before we invest, during the time we invest, and after we invest. And that's how investors can know and hold us accountable, but that's also how we know and we hold ourselves accountable and try to improve.
Yeah.
And that's just kind of, again, it's part of just the way we do things.
Well, Priya, this has been a real treat talking to you today. I mean, it always is, but being able to do it a little more formally is always fun.
Yeah, thank
So
you. Thanks.
thank you.